Hello everyone, thanks for joining us today. We're going to take a couple of minutes just for any late stragglers to join the presentation, and we'll be back with you shortly. Hi everyone, thanks for joining us today for the ERCOT Market Intelligence webinar. We're going to be talking about some of our new modeling capabilities internally here with the SEER model. So before we begin, if during the course of this presentation you have any questions, there's a little questions box on the side there that you can ask any questions to the team here. There'll be a little bit of time at the end to go through some questions. Any questions we aren't able to answer in this session, we'll come back to you. These slides will be available. We'll be sending them out tomorrow morning after the presentation. And my contact details and links to the products are available with this presentation and with these slides. So to introduce myself, my name is Rod Williams. I'm the ERCOT analyst team lead. So I'm responsible for the team that's creating some of the daily analysis, running some of the models and talking to our clients. Some of our clients are joining us on this call today. Other members of the call may not be as familiar with the ERCOT Power IQ service. So what I'm going to do is I'm going to walk through some of the main points of the SEER model. I'm then going to talk briefly about some of the specific features we built in for ERCOT. And then we're just going to do a general refresher for some of you who may not be familiar with the Power IQ service. We're also really excited to share with you some of our key metrics since last summer. We're really looking forward to sharing those with you. And then at the end, we'll just summarize some of the key points and go through some questions. So getting started, what is SEER? So SEER is the in-house tool that powers a lot of our forecasts with the Market Intelligence group, specifically for ERCOT. It's fundamentals-based price and power flow model. It really represents this really significant upgrade from the existing model that we have. Essentially, it's a security-constrained economic dispatch model, the output of which is being used in both our Power IQ, our Power Buyer models. We also provide some of the bid data as well that we can go into. So it's a network model that calculates all the prices within the ERCOT footprint. The actual outputs of those are on a hub and load zone level. So, and as you know, we're utilizing a lot of proprietary data within this, not only our Genscape real-time monitoring, but also our in-house demand and wind forecasting. And we can talk a little bit about that as we get into it. So firstly, let's just really kind of hammer home some of the benefits of why we're presenting this to you today, and why SEER is so important versus our existing model capabilities. So firstly, it's a really significant increase in speed. Generally, model runs take about 120 seconds. So as analysts, that's fantastic for us. We can get our work done quicker, more time for analysis. As clients, the opportunity is really there to run a lot of custom scenarios. That's one of the key value adds of having an analyst team behind this model, is that we're able to look at specific scenarios based on client demand. So really, a couple of examples, for example, what happens if the wind forecast misses? What happens if there's a ramp of wind? Can you plug that into your model, rerun, give us some scenarios around that? What happens if we take this line or this generator out of service? How does that affect flows in the model? What kind of constraints that might create in the model? The other advantage of SEER and loading in even more data than we've initially had is the accuracy of it. So I'm going to share with you some of the metrics that we publish externally with our reports, as well as some of the internal metrics we use to judge our performance. So firstly, I mean, it can't be understated how much of a advantage we have with some of the Genscape Power RT data that's going into the model. We recalibrate every single monitored unit, and about 65% of the ERCOT stack is monitored, including close to around all the baseload generators in ERCOT. We're also pulling in all available public data, for example, gas nominations, line and gen outages from ERCOT. We're also looking at how units are offering in on, say, day-ahead market energy sold. We're also looking at the 60-day delayed ERCOT generation data that actually shows how every specific unit in the footprint ran on any given day. We're backing that with our neural network model. So our model consistently outperforms the ISO anyway. Added to that, we have a team of in-house meteorologists who are actually tweaking those forecasts again, putting their own analysis on the raw data of the forecast. And again, that plant economics, the bid data, we unmask it for other regions. ERCOT publishes it on a delay. We do some work around the ERCOT bid data to make it more manageable, to give us more flexibility in terms of how we bid on our supply stack. And really, flexibility, I think, is the key. It's a full network model, so we've essentially replicated the entire ERCOT network, so we can study flows on any line within the region. We're forecasting zone and hub forecasts day ahead, and then again we're pulling in all that publicly available data, or the ERCOT available data, as much really as we can get our hands on. So a lot of recalibration based on the day ahead energy sold, the capacity available, the current operating plan. So there's just some of the few benefits. I'm going to talk a little bit about some of the key points within SEER. So firstly, starting with the inputs and outputs. So really, some of the fixed and constant inputs are going to be the generating unit, so each unit within ERCOT, the actual network model, so the buses, the branches, the flow gates, the aggregations, the price aggregations, whether it's a hub load zone, and then the unit bid data that's published by ERCOT on a delay. Other regions, we actually unmask that bid data as well and publish that with it. We do use a number of parameters to actually get over that 60-day delay. Some of the time series, the manually adjusted inputs we're looking at. So firstly, it's our load forecasts. Our meteorologists who are creating hourly demand and wind curves. It's fuel prices. It's generation forecasts, so how the analysts are actually tweaking each individual unit within the model. Gen and transmission outages, those actually get pulled directly into the model, and we are studying line flows on specific constraints based on transmission and generation outages around there. Some of the outputs, so I mentioned hub and zonal prices. So you're seeing North Houston, Southwest hub and load zone. Additional to SEER is actually some of the non-opt-in entities, the NOEs, so AEN, CPS, LCRA, and Rayburn load zones. So that actually means that we're now forecasting every major price point in ERCOT in terms of the load zones and the hubs. We're also looking at the hourly ORDC price adder, the marginal unit, where we're identifying a marginal unit based on the bid blocks. And then we're actually publishing flow and shadow prices for specifically modeled constraints within ERCOT. So let's talk a little bit about the recalibration process. So kind of really one of the cornerstones of the SEER modeling process is the recalibration with Power RT. So we have a large percentage of the ERCOT stack monitored. We have 65% of all total generation. The generation we tend to monitor are the more significant units. So we have pretty much all the base load monitored, a lot of the steam and combined cycle stack. Really, the units that we don't tend to monitor tend to be the smaller units that may not be having a huge impact on the grid or consistently offering in. We also have a large amount of wind generation monitored as well in ERCOT, and that's part of the recalibration process on at least the wind forecast there. So it's actually an hourly recalibration. This is really the first thing the analyst is doing when they come in the morning. We create the recap report, which is basically replicating the previous day in terms of price constraints, generation behavior, any transmission outages that's being accounted for. Outside that visibility that we don't have directly in the recalibration, and this recalibration happens on each individual monitored unit, we're also using the day-ahead energy sold data as well. So say, for example, Corpus Christi generators that don't have monitors on them currently, we actually use the day-ahead energy sold data to see how typically they would have run. The process here is really recalibrating the actual output of the unit or the actual commitment of the unit for the previous day to match the best bid strategy, the bid behavior, whether it's offered day ahead, real time, or self-scheduled, to the actual model, and then rerunning the model to recalibrate as closely as we can to the actual price on the hubs. And then, so that's a daily process. And actually, when we do our midday updates, we again recalibrate our models, integrate new data for the supply stack, and rerun our models on that. Another big part of this that our development team has worked on is the bid analysis. So we have bid blocks and heat rates based on historical analysis for each unit. In ERCOT, we do quite a lot of work around building in predictive parameters based on similar days. So that really helps us overcome the kind of the 60-day delay that you're going to see with ERCOT releasing the data, so we can really apply the most appropriate bids and heat rates to our units. There's multiple bid strategies actually available to the analyst in order to dispatch the units. So we can really have that level of flexibility and to really adequately forecast what we think the unit is going to run at. We fully decode that bid data for other regions, and that's something we actually make available as a separate offering, so clients can use that data in parallel in their models, for example. Another big part of it is flow gate analysis. So flow gates are essentially, flow gate is really an internal term that Genscape uses here, but essentially what a flow gate is it's every single pair of lines within the ERCOT network. So we've actually replicated the entire network model with a view to being able to control flows on that and see and study flows. So the first instance is we recalibrate our generator stack, whether it's based on day ahead energy sold, whether it's based on previous day unit behavior. We're going to run that based on with our demand and wind forecasts. The first thing we do, we study the line flows on each line. So SEER is actually going to highlight to us multiple line constraints. The previous model, we had a redispatch model that really only redispatched on some of the major paths, say like north to Houston, Valley Import, to create some of those congestion patterns. With this, it gives us each single available line. It's pulling in each line outage on a per day basis. So we're able to capture new line outages, branches that may not be available. And we actually are able to dynamically change that on an hourly basis. So we can, to a certain extent, override it and create congestion if the analyst has a view on whether we think, let's say, for example, Silas Ray congestion, temperatures in Brownsville hitting the mid-80s. We want to see that Silas Ray congestion. We want to create that south load zone basis. The model may not be giving us as much as we think. We think Silas Ray unit may deviate around its day ahead of schedule, as it commonly does. That's something that we're able to actually create in the model. So it's not just simply throw inputs into the model and get the output. It's, again, tweaking the output with a team of analysts behind it. One of the keys as well, we're able to run customized scenarios around these flow gates. So we say, hey, what happens if we take this line out? What happens if this unit brings on the second part of, say, a combined cycle? What happens if we lose a unit trips in the real time later? If you're an asset owner, what you're planning to take your unit down, you can ask us to rerun scenarios around, hey, what happens tomorrow if I decide to bring my unit offline? So there's a high level of flexibility within the model that we can actually play with. So a couple of ERCOT-specific features that we actually built into the SEER model. So firstly is that surplus capacity calculation. So big part of ERCOT for identifying volatile hours. So using our model supply stack, our wind forecast, and our demand forecast, we can actually take a alternate view to the ISO, to the current operating plan, and identify low surplus capacity hours that might be at risk to see any ORDC price out there. This is something that becomes key in the summer when you, especially last August, for example, and we'll show you some of our performance during last August. This really becomes key in terms of identifying hours for potential volatility. That ORDC calculation is also part of the model. So using that value of lost load, the available capacity, and Genscape's model demand, wind, and supply. And then in addition to that, we recalibrate based on day-ahead energy sold. So we pull that data really as a parallel to a certain extent to some of the Genscape data. So not only we can see unit behavior from previous days, we're also able to predict when a unit is likely to run. That includes when units potentially don't participate in the day ahead. Good example is some of the steam units in North that may not offer into the day ahead over the midday hours and then choose to ramp in the real time, take advantage of any real time price strength. So again, that's something we can capture in our model. So let's talk a little bit about how we use SEER. So this some of you who already subscribe to some of Genscape's products and use our service may be fairly familiar to this. This might be something to really just go over for some of our listeners who might not be as familiar with Genscape. So the output of SEER that clients will see is really a packaged report. We're forecasting that buy-sell trading strategy based on our model base cases, and we'll talk about the base case and the importance of that. But essentially, our forecast price for the on-peak, whether it's a weekday or the 7 through 22 weekend. So we're issuing those demand and wind forecasts. That's part of the service. We're actually delivering those price forecasts, those base case forecasts, with sensitivities around them prior to the day-ahead close. So part of that is we're packaging a report that we're putting out a BAL-day real-time, a next-day real-time, and a next-day day-ahead using our model, our load forecasts, our wind forecasts. In addition to that, we're doing congestion analysis to identify any likely constraints. And again, those custom scenarios for clients. The aim is really that is available to clients prior to the day ahead, so they can take that information and make a more informed trade around those decisions. So let's just drill down on some of those deliverables. So on peak and weekend hourly price forecasts. This is really what you're going to see from the model. So with SEER, it's actually going to be every hub, every load zone, every NOE. That's for BAL-day real time, the next day day ahead, and the next day real time. So the next day ahead, we're looking to forecast using ERCOT's load forecast, ERCOT's wind forecast. We're forecasting the day ahead clear. With the next day real time, we're using Genscape's inputs. And we actually derive a product from that that's going to look at any day ahead and real time opportunity to realize lower cost savings. Our power buyer product. We're going to move into that in a moment. So again, it's hourly price close, and this is inclusive of congestion impacts. We're actually going to call out the likely constraints that show up for any given day and their impact on the hubs. Again, it's using Genscape's proprietary wind and demand forecasting. So we actually have a team of meteorologists who are dedicated. And again, those reports and analyst discussions are delivered prior to the day ahead market close to enable you to make a trade with the most information. So let's just talk about that demand and wind gen forecasting, because that's really a big piece of it. We could just use the ISO's data. We could just use a third party. We choose to do it in-house really because having a meteorologist on staff and able to talk to the analysts and talk to the clients about some of the risks is really what sets us apart and allows us to outperform, say, ERCOT's forecast, for example. So we're providing hourly adjusted demand and wind forecasts on a zonal or wind farm level. Part of it, as I mentioned, is a briefing on that forecast. We're talking about the risks around the forecast. Our METs are able to give directional risk. They're able to update their forecast as newer models come in. And again, that custom scenario again moves in. So you can say to us, hey, get your MET to put another gig in the evening peak tonight based on cooling load. Let's see what happens. Let's rerun the models through that. So it's really the complete kind of support there from both analysts and meteorologists. What I want to show you as well is some congestion analysis. So this is a page directly from our reports. This is actually, I think this actually might be today's report. So we actually show, we do congestion analysis based on every line outage. The idea is really we do independent congestion analysis. Each analyst will look at transmission outages, how generation is running. We'll also look at that in the context of how the SEER flowgate module is showing us likely transmission constraints. So what we're showing you here, and I apologize if the slide is a little small to see, we're listing the constraint, we're listing the bullish and bearish impact on a hub or load zone. So this is useful for those of you who are maybe more concerned with basis risks as opposed to actually just kind of hub impact. So any kind of price difference between hub and load zone. We're also identifying the historic top source and sink nodes. So looking at what are the likely highest and lowest nodes when this constraint appears. We also look at where this constraint showed up in the day ahead, the drivers, and then we also call out the risk hours. So we say, for example, a typical outage for the Silas Ray congestion, Los Fresnos, Loma Alta, we'll talk about the drivers of the line outages, so that Laureles, La Palma, and Paredes, MD Central line outages. We'll talk about likely hours that we expect it to appear. And so this is really based on where we see the strongest flows in the SEER model, as well as the analysts call on that. We're also talking about the level of risk. So, for example, today with about 86 degrees down in the valley, that could be a higher risk. Tomorrow, when we drop about 10 degrees, we think with Silas Ray continuing to be committed in the day ahead, and we can see that generation on power RT, we think potentially that may be slightly less of a risk and may have a lesser presence in the day ahead with potentially less in the real time as well. So again, all this data is packaged and sent to our clients prior to day ahead close. Big part of this as well is that you have the ability to talk to an analyst about the assumptions. Another way that we're using the SEER data is in a product we call Power Buyer. Now, probably a lot of you are familiar with this. This is really optimizing between a day ahead and real-time buying strategy. So this is the combination of our next day models, our next day day ahead model, which is using ERCOT's inputs, so ERCOT's load forecast, ERCOT's wind forecast, and then our next day real-time model, which uses our load, our wind, and we're identifying the difference in it. So the key is identifying the lowest cost hours for buying power, or conversely the highest cost hours for selling power. So what we do is we actually have a risk-adjusted buy or sell signal based on whether you should buy in the day ahead or buy in certain hours in the real time as well. We're also able to identify with that any of the basis risks. So, for example, if you're transacting power at the hub level, serving load on the load zone level, we're able to identify by looking at that congestion any kind of price separation risk that you might see. So, wanted to get into some of the performance metrics. We use quite a few different performance metrics. Some of the key to this is we do actually publish our daily performance metrics in terms of our mock P&L, as well as our mean absolute percentage error for demand forecast. There's also a couple of internal metrics we use to just measure how we're doing. And I'm going to show you some metrics way back to July that shows how we've been performing. So key metrics we use is the market opportunity captured, and then the savings based on our power buyer compared to purely a day ahead strategy. So just to go through that, firstly, market opportunity captured. So what we do is this is really based on how much market opportunity there was on each month. So for the BAL day and the next day, we're looking at, okay, when the report was issued, was there an opportunity to send a signal based on whether our base case forecast was above the offer or below the bid? So if the bid offer was 20 at 25 and our base case was $18, then we're sending a bearish signal to the market. If the market actually cleared below the bid ask, that counts as a market opportunity, and whether we sent that signal in the correct direction. So you can see that market opportunity. We fluctuate a little bit during the BAL day. Consistently strong market opportunity captured. The percentage captured versus the overall. That's our P&L you see there. So you can see there may be the argument, okay, lower demand levels over the winter means that there hasn't been as much market opportunity, but we're actually capturing a pretty significant amount. August really stands out in that it was a very volatile month. We were close to the top of ERCOT supply stack, record demand levels, and again, there was a huge amount of market opportunity in both the BAL day and the next day. And really using our models and using a lot of our proprietary software, we were able to capture that opportunity. The next metric we also look at is the correct signal. So again, whether we are sending a signal above the offer or below the bid, and the market clears either side of the bid offer at the time of report issue, we gauge ourselves based on did we send a signal? Did we send a signal in the correct direction? So you can see the percentage of signals sent. Invariably, we do try and always send a signal. So our signals are north of about 50-60% on both the BAL day and the next day. We also look at the number of times that we actually sent a correct signal. So not only did we send a correct signal, the day settled above or below the bid ask, and we were sending a forecast signal in the right direction. Again, those mid-market base case forecasts aren't included. If we didn't send a signal, if we were, say, the market was 20, bid at 20, offered 25, we sent a $23 signal, or it was $23 price. There's no signal there. We also don't count days where the market settled within the bid ask. Lastly, what I wanted to show you was some of the power buyer savings. So one of the common common things I hear is that, well, the market is relatively quiet, specifically over the winter, and so there's not really that much opportunity to realize any cost savings versus just purely showing just taking a day-ahead strategy. So what we do is we look at Power Buyer's hourly risk-adjusted next day guidance. So we're saying, what is the least cost strategy? If you can take some of your load to the real time versus 100% day ahead strategy, what is the least cost strategy you should be doing? And so based on that, we look at these performance metrics based on if you took a purely 100% day ahead. So every single day you just took all your load into the day ahead, nothing in the real time. And we actually look at that versus following our guidance. What would have been the percentage savings? So you can see we've done it back to July 2015 through to March 20th, so a few days ago. We can definitely break down these numbers for you on a month-by-month basis. If anyone needs those numbers, please feel free to reach out to me. But again, we show pretty consistent savings. And again, it's really down to a lot of that proprietary data we have, the availability of the bid data we have, and how we're using that bid data and the bid strategies, as well as being able to identify both how monitor generation is running through some of our proprietary monitoring, as well as utilizing all available gen data that we have. So that pretty much wraps up the presentation that I had. So just really to clarify and just go over a couple of points. So this is an upgrade on our existing internal model process that we're able to that we're actually running our models through. Biggest change is really the speed, the accuracy, and the flexibility, the ability to use some of that proprietary data. Key to our clients' use of this is being able to have an analyst team behind it. And a big advantage that a lot of our clients use, and really the most value they see, is when you're able to engage me and my team on talking through some of the forecasts. It often gets to the point with our clients where actually the report serves as a general summary. We'll follow up with a phone call prior to the day ahead close, and we'll actually talk through specific risks to the client. Another big advantage of the service is being able to walk through custom scenarios with the analyst, and actually being able to rerun those scenarios for anything. And again, anything that you share with us that we don't share with the rest of the market or other clients, those are customized confidential scenarios to our clients. So up on the screen is a link to Market Intelligence, where you can find a little bit more information on some of the products. My contact details are also there. Encourage you to reach out to me with any questions you might have. Love to hear some feedback, anything you had more questions on. We're going to take a short break now, and we're just going to have a look at some of the questions that came in. But thank you everyone for joining us, and we'll be back shortly. Okay, we had a few questions. Just to go through, so firstly, SEER is actually an acronym. We don't have a dedicated kind of name for the SEER. We're really just looking for a good model name that shows kind of forecasting and accuracy, so we chose SEER. There was another question about getting the NOE-LZ price forecasts. So we're going to be rolling that out over the next couple of weeks. So for some of our NOE-LZ clients who are interested in doing that, we'd love your feedback on some of that. And again, any custom scenarios around that and any specific units that we can run scenarios around, we're definitely able to do. And then there was another question in terms of just monitoring. How much generation do we have monitored? So the actual number in ERCOT that we have monitored is 65%. That breaks down in terms of, I think it's basically every single baseload unit in ERCOT bar one. I think it's a coal unit that is monitored in ERCOT. We also monitor a large amount of the CC, steam, and wind stack as well. Now, our approach for monitoring these units is based on, a lot of the time when analysts are looking at units, we're trying to really identify which are the really important units to have a visibility on in terms of market variability. So case in point, one of our most recent additions to the interface was the Silas Ray constraint. Some of you may have seen the blog post that my colleague Connor Danielson put out recently. We just started monitoring Silas Ray in the past month or so. We're also going to be seeing new additions around combined cycles in the Corpus Christi area shortly, as well as additional wind farms. We're identifying really units that are going to drive the most price or need the most visibility. So those units tend to be some of the larger steam units, combined cycles in north and south, for example. A lot of wind in west, some of those key CREZ wind generators that we see there. And then again, we're able to really focus our monitoring based on what clients need to see. One of the advantages of having an analyst desk here is that we're able to actually see what really are the important units to have as well. So I think that pretty much wraps it up for questions for today. Again, if you do have any other follow-up questions, any comments, any feedback, there will be a survey at the end of this for you to fill out. We'd really appreciate your feedback. And thanks for joining us today. I was Rod Williams. I'm the ERCOT team lead, and we look forward to hearing from you soon. Thanks. Bye.